Bitcoin just did something that changes everything for many investors. The crypto market is in a state of extreme flux, with Bitcoin experiencing a shocking drop that has wiped out billions and left countless people wondering, what on earth is going on? If you've been watching your portfolio shrink, or even if you're just curious about the future of digital money, the emotional stakes here are incredibly high. We're talking about financial futures, dreams of early retirement, and the very belief in a decentralized financial system. This isn't just another dip, it feels different. The leading cryptocurrency has fallen below critical psychological thresholds, reaching levels not seen in over a year, and has plummeted nearly 50% from its October 2025 all-time high of $126,000. The fear, uncertainty, and doubt, or FUD, are palpable, spreading like wildfire across social media and investor forums. But here's the thing: panic selling often blinds us to the real drivers. What if this isn't just random market noise? What if there are powerful, underlying forces at play that most people are completely missing? In this video, we're going to pull back the curtain and reveal the true reasons behind Bitcoin's dramatic decline, offering you a clear, fact-based understanding of what's happening and what it could mean for your investments. You'll learn the critical factors influencing BTC's trajectory and gain insights that could help you navigate this volatile landscape. Stay tuned, because understanding these dynamics is more crucial now than ever before.
People often ask how this channel puts out content like this so consistently. And honestly, I'm not doing the heavy lifting manually. I'm using Helios. It's the AI engine we built to handle the impossible parts of creation. It is literally the power behind what you just watched. If you want that kind of speed and quality at your fingertips, don't just watch AI build the future, start building it yourself. Helios is finally open to the public. Check the link in the description and go bring the heat.
Now, you might be thinking, Bitcoin is always volatile, this is nothing new. And you're right, cryptocurrency is known for its high volatility, with dramatic rises and sharp drawdowns being part of its history. But here's where it gets interesting. The current downturn isn't just a typical market correction. It's a complex interplay of factors that are creating a perfect storm. Historically, Bitcoin has seen significant price increases after halving events, which reduce the supply of new Bitcoins. However, market dynamics are influenced by a variety of factors, and price movements can be complicated. The crypto market just lost $184 billion, dragging the total market cap down to $2.43 trillion. Bitcoin is trading near $71,470, dangerously close to the 2021 all-time high of $69,000, a level that has historically acted as strong support. If this level breaks, it could signal a significant shift. What most people don't realize is that while retail investors make up a large percentage of the crypto market, institutional behavior is increasingly influential. The Coinbase premium, for instance, has turned deeply negative, indicating that institutional selling is currently stronger than retail demand. This suggests a deeper, more structural pressure than just individual investors getting cold feet. We're witnessing a battle between confidence and fear, and understanding the forces driving this tension is key to making informed decisions. So, what are these deeper forces? Let's start with the macro picture. Global economic conditions are playing a massive role. Things like recessions, inflation, and changes in interest rates can significantly affect the crypto market. For example, high inflation can drive investors to seek safer assets, or conversely, make riskier assets like Bitcoin less attractive if interest rates rise. The latest sell-off, for instance, followed news that could lead to higher real interest rates and a smaller Federal Reserve balance sheet, weighing heavily on risk assets. But wait, there's more. Regulatory changes and uncertainty are also major contributors to market instability. New policies or regulations unfavorable to cryptocurrencies can create significant uncertainty and trigger price declines. While institutional adoption of Bitcoin has been on the rise, with many seeing it as a legitimate asset for diversification and long-term growth, regulatory clarity is still a developing area. This evolving landscape means that even as more traditional financial players enter the space, any hint of stricter oversight can send ripples of concern through the market. What most people don't realize is that these macroeconomic and regulatory shifts aren't just background noise. They are fundamental drivers that can either fuel or stifle Bitcoin's growth, creating a volatile environment where prices can swing dramatically based on global sentiment and policy decisions. Beyond the macro factors, there are critical micro-level dynamics at play that are amplifying Bitcoin's price drops. One of the most significant is the influence of large-scale holders, often called whales. When these whales decide to sell substantial amounts of Bitcoin, it can trigger panic and encourage other investors to sell, exacerbating price declines. This market manipulation, whether intentional or not, can create cascading effects. Furthermore, technical factors like overbought market conditions, breakdowns in technical charts, or a series of liquidations in leveraged trading can also contribute to price declines. The current market sentiment, often tracked by the Fear and Greed Index, shows a shift towards fear, which can lead to mass selling. And that's not even the craziest part. The crypto market is especially vulnerable to fear, uncertainty, and doubt because retail investors make up a larger percentage than in traditional markets, and social media amplifies panic virally. This creates a feedback loop where negative news or events, even rumors, can quickly erode investor confidence. We've seen instances where Bitcoin has dropped below its 50-day moving average, historically leading to further declines towards the 200-week moving average. This suggests that once a downward trend gains momentum, it can be difficult to stop, as both panic selling and profit-taking by early investors contribute to the pressure. Here's the thing. Understanding these intertwined forces is crucial for anyone trying to make sense of Bitcoin's current trajectory. So, what does all this mean for Bitcoin's future and your investments? The current price drops are a confluence of macroeconomic pressures, evolving regulatory landscapes, and specific market dynamics like whale activity and amplified sentiment. While the short-term outlook might seem grim, with some analysts predicting further drops if key support levels are breached, it's essential to consider the broader picture. Historically, every major cryptocurrency crash has eventually recovered and exceeded previous highs, rewarding investors who maintained conviction through volatility. This period could be a transition from dispersal to reset, rather than a short-term correction, potentially taking months. For long-term holders, the fundamentals, particularly institutional adoption, remain strong. Institutions are increasingly viewing Bitcoin as a strategic allocation, not just a speculative asset, driven by its diversification benefits and improving regulatory clarity. The key takeaway here is that while volatility is inherent to crypto, understanding the multifaceted reasons behind the drops allows for a more rational approach. It's about distinguishing between temporary market noise and fundamental shifts. What are your thoughts on Bitcoin's current situation and its long-term potential? Do you see this as a buying opportunity, or a sign of deeper trouble? Let us know in the comments below, and don't forget to subscribe for more critical crypto insights that help you navigate the ever-changing world of digital assets.
I hope you got some value out of this video. And if you're sitting there thinking you want to build something like this yourself, you don't have to start from scratch. I built Helios to give creators an unfair advantage. It takes the heavy lifting out of the process, so you can focus on the ideas. It's exactly what I use, and now it's available for you too. The link is in the description. Don't just watch the future, go build it with Helios. I'll see you in the next one.